In this video, we'll explore 8 crypto altcoins with bigger market caps to consider buying in April 2025. With this portfolio, you could potentially retire during the 2025 bull run. Let's jump right in with 2 DeFi projects. First up is Drift Protocol, the leading DeFi project on the Solana ecosystem. Drift is a decentralized exchange designed for perpetual swaps trading, running on the Solana blockchain. Perpetual swaps are a type of derivative that allows traders to bet on the future price of an asset without actually owning it. Drift Protocol uses a virtual automated market maker model, which differs from traditional AMMs, by using a virtualized liquidity pool to manage trades. This approach reduces slippage and improves capital efficiency, making it more effective for high-frequency trading. Drift aims to offer an advanced, user-friendly platform for traders looking to leverage DeFi tools. The protocol features cross-margin trading, allowing users to manage multiple positions with a single margin account. Additionally, Drift integrates with Serum, a decentralized order book on Solana, to provide deeper liquidity and a better trading experience. To enhance user experience and minimize costs, Drift benefits from Solana's high-speed, low-cost blockchain. The platform is designed to be highly efficient, offering low latency and negligible transaction fees compared to other blockchains like Ethereum. Drift also incorporates a robust risk management framework to protect traders and the platform. The system includes mechanisms like dynamic funding rates, which adjust based on market conditions to balance long and short positions. A key aspect of Drift is its focus on decentralization and community governance. The platform is governed by the Drift DAO, where token holders can vote on key decisions, such as changes to protocol parameters or the addition of new features. Drift Protocol's utility token, Drift, plays a central role in the platform's ecosystem. It is used for governance, staking, and as collateral for trading. Stakers earn a share of the platform's fees, creating an incentive for users to hold and stake their tokens. This design aligns the interests of the community with the long-term success of the platform. Overall, Drift Protocol is a comprehensive decentralized trading platform that combines advanced financial tools with the benefits of DeFi. Drift has a market cap of 150 million. We think that a market cap of 15 billion is possible in a bull run for the leading DeFi project on Solana. That is a 100x from here. For our second DeFi project, let's look at Pendle Finance. Pendle is an innovative project that brings a unique and fresh perspective to the practice of yield optimization within the DeFi space. At its core, the protocol is intricately designed to enable users to trade tokenized future yields of DeFi assets. This ingenious approach paves the way for a novel market for yield exposure, a concept that was previously beyond reach in the DeFi landscape. This market offers users unprecedented access to yield that they would otherwise have been unable to tap into. In turn, this fosters the creation of new, lucrative investment opportunities for investors who are constantly on the hunt for yield. Central to Pendle's functionality is the use of yield tokens. These tokens serve as a representation of a future stream of yield emanating from a specific DeFi asset. Examples of these assets range from a liquidity pool token to a lending token. The unique feature of these tokens is that they can be traded on secondary markets. This provides users with the ability to buy and sell future yield exposure to these assets, opening up a new frontier of opportunities. One of Pendle's key strengths lies in its capability to create customizable yield structures. These are tailored to meet the specific needs of users, providing an additional layer of flexibility and customization. This feature allows users to optimize their yield strategies based on their individual risk tolerance and investment goals. In addition to all these features, Pendle also introduces a unique staking mechanism. Users can stake their Pendle tokens, thereby earning rewards for providing liquidity to yield token markets. Pendle currently has a market cap of 500 million. We believe that a market cap of 30 billion is possible in a bull run for this unique project. That is a 60x from here. As our third project, we present Kaspa. Kaspa represents a groundbreaking innovation in the blockchain technology realm. It is a transaction layer that offers instant confirmation, powered by a proof-of-work engine that not only delivers speed, but also scalability, redefining how transactions are processed on the blockchain. When transactions are dispatched to miners, they can be promptly added to the ledger. This is made possible by a revolutionary block DAG structure that forms the backbone of the Kaspa system. This structure is based on the GhostDAG protocol, which is an innovative evolution of the Nakamoto consensus, scalable and suitable for a wide range of applications. In keeping with the principles that underpin Bitcoin, Kaspa implements a proof-of-work mining system. Additionally, it adheres to a deflationary monetary policy and ensures no pre-mine or central governance, thereby maintaining the decentralized nature of the blockchain. What sets Kaspa apart is its unique capacity to uphold high block rates, all the while maintaining the high level of security that is characteristic of the most secure proof-of-work environments. Unlike many traditional cryptocurrencies, Kaspa successfully circumvents the trade-off between security, scalability, and decentralization. The decentralization of cryptocurrencies often necessitates a limitation on their block creation rate. This is to curb the creation of orphans, off-chain blocks that manifest during the time it takes for a latent block to be propagated across the network. However, Kaspa's consensus layer employs GhostDAG, a proof-of-work consensus protocol that evolves Nakamoto's chain into a directed acyclic graph of blocks, effectively resolving this trade-off. The result is a robust cryptocurrency backed by 51% security, supported by a high number of miners and nodes, and delivering throughput equivalent to 1 block per second. This makes Kaspa a highly efficient platform for transactions. Furthermore, Kaspa's consensus layer facilitates fast confirmations, thereby enabling use cases that necessitate immediate proof of publication, such as e-commerce. This stands in stark contrast to traditional cryptocurrencies, which are often hampered by slow block rates leading to sluggish confirmations. Slow block rates also contribute to high variance in mining income, prompting miners to join larger mining pools. However, Kaspa's fast block rate counteracts this effect, reducing the variance of mining income, which in turn diminishes the incentive for miners to join large mining pools, contributing to the decentralization of mining. In conclusion, Kaspa is an exciting and unique project that brings a revolutionary solution to the scalability problem plaguing decentralized cryptocurrencies. Its cutting-edge technology, rooted in the GhostDAG protocol, enables high block rates and swift confirmations without compromising on security or decentralization. This positions Kaspa as an ideal platform for an array of use cases, including e-commerce and DeFi, heralding a new era in blockchain technology. Kaspa currently has a market cap of $1.7 billion. With the big-brained people behind Kaspa, a market cap of at least $60 billion is not crazy to think of in a bull run. That is a 35x from here. Up next are two top AI projects. First up is Virtual Protocol. Virtual Protocol aligns incentives for the creation and monetization of AI personas for every virtual interaction. The Virtual Protocol is a decentralized factory that creates AI characters for various virtual worlds, such as games or online spaces. Its focus is on developing and selling these AI personas in a mutually beneficial way. It's like creating digital characters capable of anything, from mimicking a movie character to assisting in writing a horror story, or even representing a digital version of yourself. To achieve this, the protocol incentivizes people to contribute their skills and ideas. Contributors who add data and develop AI models are compensated for their efforts, attracting top talent. Those who ensure the seamless functioning of everything are also rewarded, maintaining high quality and fostering trust in their creations. For developers who incorporate these AIs into their apps, it's straightforward to integrate into their system, facilitating the creation of unique, immersive experiences without extensive technical difficulties. This approach allows faster and more cost-effective product deployment. For rights holders of specific characters or stories, this presents a new revenue stream and a means to maintain their content's popularity. Each contribution, whether it's data or a model, is created as an NFT and proposed on-chain. Validators then compare these submissions to the current version. If a new submission is considered an improvement, it is assimilated as the latest state of the respective module. Being in the current state allows contributors to earn token rewards virtually. Contributors retain ownership of their submissions, sharing in the value created by their contributions. This system ensures that those who enhance the protocol are compensated for their work. Virtual Protocol currently has a market cap of $400 million. We believe that a market cap of $40 billion is possible in a bull run for this unique project. That is a nice 100x from here. As our second AI project, we would like to highlight Render. From animated movies and online gaming to the crypto metaverse, Most forms of digital entertainment heavily depend on motion graphics and three-dimensional visual effects. Industrial applications of 3D graphics range from product prototyping and simulation to scientific and architectural visualization. As the demand for immersive digital worlds grows, so does the need for complex computations. The Render token is designed to revolutionize the 3D rendering industry. By leveraging blockchain, Render provides an efficient and secure way for creators to access powerful computers for complex rendering tasks. Essentially, anyone can join the Render network to create or rent out computational resources, accelerating the rendering process. Render serves as a bridge between creatives and Render nodes, a distributed network of powerful computers, promoting faster, easier, and more secure rendering. Render also enables crowdsourcing of 3D projects and digital asset trading, creating an accessible ecosystem of creative digital assets, applications, and ideas. Render tokens' GPU-powered renders are applicable not only to film production but also to video game design, VR experiences, and more, enabling the media sector to produce high-quality visuals quickly. Apart from encouraging people to join the network, Render tokens can be used to purchase computing resources. The Render network is a self-sustaining, mutually beneficial ecosystem. By contributing their computing resources and purchasing additional ones with Render tokens, users are rewarded, incentivizing them to retain their tokens as their value increases with demand. The token reward system implemented within the Render network promotes a healthy, thriving ecosystem. This incentivization approach not only encourages existing users to invest further in the growth and success of the network, but it also attracts new users by creating a dynamic and rewarding environment. This enhanced level of security, trust, and transparency is not just a benefit, but a necessity for the Render network's continued growth and prosperity. As the network expands and evolves, these elements will remain central to its operation, ensuring the Render network remains a reliable and attractive platform for users. This, ultimately, maintains the network's competitive edge and ensures its longevity in a rapidly changing digital landscape. Render currently has a market cap of $1.7 billion. Render is one of the most complete projects in the AI space, and we think that a market cap of $70 billion is possible in a bull run. That is a 41X from here. As our sixth project, we would like to highlight Aerodrome. Aerodrome is a next-generation automated market maker designed to serve as the primary source of liquidity for Base. It's built on the robust Velodrome V2 tech stack and introduces a range of innovative features, including concentrated liquidity, automated voting, and a unique NFT marketplace. Aerodrome employs two tokens, Aero for utility and Aero for governance. The latter, an NFT, allows users who lock their Aero tokens to become Aero voters. This gives them a voice in the distribution of token emissions and the opportunity to earn rewards. Liquidity providers are incentivized to contribute liquidity to the system in exchange for Aero tokens. Traders enjoy low slippage and minimal fees, and other protocols can rapidly build liquidity by locking Aero and providing incentives. What sets Aerodrome apart? Firstly, its vote-lock governance model, which grants Aero voters significant sway over the protocol's monetary policy. Secondly, a dynamic emission schedule for Aero tokens that balances rapid growth with sustainability. Lastly, it reserves a quarter of its initial vote power for public goods, funding crucial ecosystem assets. In collaboration with the Base team, Aerodrome is developing a unique public goods engine. This engine, a core part of Aero, ensures liquidity for vital assets. The fees generated from these pairs are directed to the public goods funding and voting. As a result, the Aero token becomes central to the ecosystem. Protocols that plan to integrate with Base will find Aerodrome a vital ally. The flywheel effect in Aerodrome is a compelling force behind its success. The Aero token and Aerodrome's fundamentals create a self-reinforcing growth cycle. When the price of Aero rises, liquidity providers make more money, incentivizing them to add more liquidity. Increased liquidity boosts trading volume, which raises protocol revenue. More people lock their Aero tokens to generate income, encouraging even more protocols to participate. This virtuous cycle continually enhances the value of Aero and the protocol itself. In terms of impact, Aerodrome is set to shake up the DeFi sector. Aero is more capital efficient, community-driven, and flexible than traditional AMMs. And because it's the liquidity layer for Base, which is the fastest growing Layer 2 network this year, Arrow can become a big deal in the future. Arrow currently has a market cap of $350 million. Looking at how the project is being handled, a market cap of at least $30 billion can be reached in a bull run. That is an 85x from here. For our 7th project, we'll look at Clearpool. Clearpool is the first decentralized credit marketplace worldwide, originating hundreds of millions of loans through its DeFi protocols. It operates on various networks, giving investors the freedom to choose the loan requests they wish to fund. Clearpool serves as a bridge between institutional borrowers and lenders. These lenders contribute their digital assets to individual borrower pools. They have full control over the borrower they lend to and their risk exposure, which they can assess by reviewing borrower profiles. Lenders can earn higher interest rates and returns by providing unsecured institutional liquidity to higher-risk borrower pools. To participate with Clearpool as a borrower or lender, users must own C-Pool tokens. Borrowers set up their borrower pool, and financial institutions determine the interest rates for each borrower pool through the Clearpool Oracle network. Lenders can then stake their C-Pool tokens to a specific pool, earning interest on their staked tokens. Clearpool initiates blockchain technology crypto lending by creating single borrower pools. Risks are evaluated based on borrowers' profiles and the credit market, enabling potential lenders to assess the total value potential for their investments. Clearpool launched in early 2022 with 3 liquidity pools from FBG Capital, Wintermute, and Folkwang. In 2024, Clearpool has introduced term pools, credit vaults, a new chain, fintech borrowers, and a new user interface. Looking ahead, its decentralized credit marketplace will further evolve, featuring multi-chain growth, detailed credit report availability, the second version of Clearpool Prime, a new staking model, exchange-traded pools, and other enhancements. Clearpool has a market cap of $100 million right now. A market cap of at least $20 billion is doable in the future and is a crazy 200x from here. As our final project, we would like to highlight Injective Protocol. DeFi has quickly become one of the most popular uses for blockchain technology, replicating traditional financial services through smart contracts. Injective provides tools to build decentralized applications, dApps, focusing on these financial functionalities. It aims to create a comprehensive DeFi infrastructure that is interconnected and can access deep liquidity. Built using the Cosmos Software Development Kit, SDK, Injective benefits from fast transactions and the interoperability of Cosmos's inter-blockchain communication protocol. Injective's native token, INJ, is used for staking to validate transactions and for community voting to govern the protocol. Injective has received backing from major crypto investors, including Binance, and additional funding from venture capital groups like Pantera and Jump Crypto. The protocol has also partnered across the crypto space to support its development, including funding a $150 million ecosystem fund. Injective's primary role is to provide software modules for developers to build DeFi solutions. Because Injective's tools set a standard in its ecosystem, any DeFi protocols created with them are interoperable, allowing them to interact and share liquidity. Injective also addresses the front-running problem that has plagued DEXs. Front-running occurs when high-frequency traders, typically bots, detect trades submitted by individual traders and jump the line to execute more advantageous trades. Injective uses frequent batch auctions to solve this issue. In addition to liquidity aggregation, Injective maximizes interoperability using the existing Cosmos infrastructure. Cosmos introduced the IBC protocol in 2021, allowing various chains and dApps using the IBC standard to transact with each other. Through IBC, tokens and other data can seamlessly traverse Cosmos's ecosystem. Injective has also prioritized communication with chains outside of Cosmos through bridges, supporting digital asset transfers between individual chains. INJ is the native token of the Injective blockchain, serving multiple purposes for users. For example, INJ can be staked to secure the blockchain. Injective uses a delegated proof of stake, DPoS consensus mechanism based on Tendermint, to set the rules for processing transactions. Injective currently has a market cap of $800 million. We predict that Injective will have a market cap of at least $40 billion in a bull run. That is a 50x from here. Thanks for watching, and make sure to hit the like button, subscribe, and put notifications on to stay updated on all the latest crypto trends.